As mentioned, I'm Paul Westfalls, President and CEO of Western Copper and Gold. I've been with the company for, a little over a decade, and I can honestly say that the past 24 months in this company have been by far the most exciting 24 months that we've had. We've taken, our flagship asset and the only asset in the company, the Casino Copper Gold Project, almost doubled the resource, brought in a strategic partner with Rio Tinto, issued a PEA, which is turning into a feasibility study right now, built out the team, and are on the verge of getting back into the regulatory process in under a year. So it's been a very exciting couple of years, and hopefully I'm going to do my best to tell you a little bit about that story. I will be making forward-looking statements, so please review this before making any investment decisions. So just to sort of run through some of the corporate structure, the first thing to note is that we trade both on the TSX and on the NYSE American. So it's always good to look, particularly if you're looking for things like volume. Most of our trading now is on the US exchange, so be sure to look there. If you're looking for the volume and how easy it is to get in and out of the story. At the end of Q2, we had $43 million in the bank. That is more than sufficient for this year and next year, and really probably even beyond that moving forward. Share price, $2.30 on May 6th. It's been a bit of a roller coaster ride. We dropped below that and came partially back, and I'm not sure where we are today, but we're sort of in that ballpark. Gives us a market cap of around $350 million. Pretty simple structure, just one set of warrants, and those are actually held by one of our directors. Top shareholders, Rio Tinto, I'll be talking about them here shortly, but some good blue chip funds as well. We've got Fidelity, Franklin, Copernic, as well as pretty good board and senior management ownership on the project as well. So as sort of a kickoff here, we're sitting in one of the strongest copper markets that we've seen in the past decade. Talk about Casino. This is one of the largest copper gold projects in Canada. We're located in the Yukon, which is a really, I keep calling it an emerging gold district or mining district because we've been there for a while, but it's almost an established mining district now with 3 operating mines. We've got a new PEA, which I'll talk about, and then the strategic investment from Rio Tinto. And, we've continued to add value. As I said, expanded the resource in 2020, new PEA in 2021, feasibility study due out here sort of within the next month or so, and then working towards permitting. So to kick off, I want to talk a bit about the strategic investment by Rio Tinto. So at a high level, it's a private placement. So they gave us $25.6 million, and that gave them around 8% of the outstanding shares. But these strategic investments, typically when you do these investments, you sign an investor rights agreement, and that's what we did with Rio. And so, like everything, the devil's in the details, and really it's about the details within that investor rights agreement. And so the way to think of the investor rights agreement is really around a scope of work. So when we started talking with Rio Tinto, they said we like the project, but we need to do sort of this sort of second level of due diligence. We need to do a bunch more work. It's going to take us about a year. So we structured it as this strategic investment. To make sure that work got done, we've set up a technical committee that they sit on. They have a board observer. They have the right to second people into the project. But importantly, all of those rights are in place for 18 months. The idea here is they come in, they take a look. If they like what they see, we sit down, talk about next steps. So where are we with this investor rights? Well, where are we in terms of executing the scope of work? You can sort of take a look at this list here, and it reads like a due diligence list: metallurgical, geotechnical drilling, resource confirmation drilling, a little bit of exploration, but 1,600 meters is not really a big exploration plan, and it's just a couple targets. Scanning using the Intersoft core scanning, which is a pretty neat machine, of about 50,000 meters of historical core. The last remaining bit is really the MET program. That MET program is mostly done at this point in time. Should be complete by the end of June, maybe mid-July. Obviously, continuous engagement in terms of community and First Nation and government relations, which unsurprisingly is a key focus of a company like Rio Tinto as well. So things are going well. It's been a great experience, and we're almost done the scope of work, so we'll see where things go. But I'm certainly at this point feeling pretty positive that in the next 6 months that hopefully we'll have something exciting to talk about. Anyhow, let's move on and talk a little more broadly. Just going to spend a couple of minutes talking about copper. I mean, there's lots of other people speaking here today that can talk more intelligently about copper, and there's lots of good facts out there, but there's a couple of ones I really like here. One is that obviously copper is a green metal. It's driven right now by the drive to combat global warming and electrification. To keep greenhouse gas and temperature rise to 1.5 degrees, you need 12 million tons of additional supply in the next decade. Or the previous 2 decades, we only grew copper supply by 7 million tons. I mean, essentially what that's telling you is that it's not achievable. But more importantly, obviously this is going to drive up the price of copper. It's going to move good projects in good jurisdictions like Casino forward significantly. The other little stat I like there in the little box in the bottom is the electrification of the bus fleet. And China is adding a London-sized fleet of electric buses every 5 weeks. I mean, it just, we think about electrification here by how many Teslas we pass on our way to work, but in places like China, they're taking it a lot more seriously and pushing it much quicker. So let's talk about the deposit. Casino, large copper gold project, 21 million ounces of gold, 11 billion pounds of copper. When you look at the distribution of metal value in the ground, about 40% from gold, 40% from copper, and about 20% from moly. So, significant in both the copper and the gold side of the equation. When you stack this up globally, when you look at the copper gold projects around the world, and this is what this graph here shows, we actually come in as the 5th largest copper gold project that's controlled by a junior mining company. That's obviously that's great, but what's interesting about this slide is there's just not that many copper gold projects out there. It's a different animal than gold. Copper projects, they tend to be larger, but they're few and far between. There's just not that many of them out there. The other one is to look at gold. I mean, 21 million ounces of gold puts us in a pretty rarefied set of deposits as well. We're the 8th largest gold deposit controlled by a junior mining company. So again, this is certainly a unique, large deposit located up in the Yukon. So let's talk about it. And actually, before I leave this slide, I always like to point out that that's what it looks like. So where this picture is taken from, you're standing on ore, looking down, and where that exploration camp is where the mill would be. But a couple of takeaways there. First of all, it's not all that mountainous. This part of the Yukon was not glaciated, so you don't have the big mountains and valleys that you have in, say, northern British Columbia. The other thing is that it's actually, as you can tell, not all that green. This part of the Yukon is semi-arid. We will need to bring water in, and during operations, it's a zero-discharge facility. So I always say we're closer to Arizona than we are to, say, northwestern British Columbia. So this shows the deposit, a couple parts to the deposit. The surface of the deposit, sort of shown there in the white, is enriched in gold, depleted in copper. That gets mined off first and goes onto a gold heap leach. And that's around 220 million tons at a little under 0.3 gram per ton gold. Beneath that is the main value in the deposit. So M&I of 2.2 billion tons at 0.36 copper equivalent, and then another 1.5 billion tons of inferred. So obviously large deposit, grades, okay. But important is the core zone. And, this is one of the key aspects of this deposit that really separates it. And, when I've, gotten to know the guys from Rio, when they talk to me, they say, you know what, Paul, this is what sort of got us excited about this, was this core zone. It represents, it makes it a bit different than a number of the other deposits out there. And when we literally drill into the core zone, you can see the grades run quite a bit better. And so this is drilling that we did last year. This was directed by Rio. What did they want to look at? They just wanted to look at this zone. This is where almost all the drilling was focused in. And you can see why. 300 meters of over 1% copper equivalent. Another intercept, again, in the same sort of area in a different direction, 66 meters of over 2.5% copper equivalent. These are, and who knows? We could have kept going. That 300 meters, that was the depth of the hole. These are significant at surface, intercepts. And so we can put a resource around that. And so we've done that, and this is from our 2020 resource. There's 330 million tons of 0.7 in that core. That is a significant, good grade mine starting off even just with that. And when you look at the way that we mine this, you see this come out. And in the top bars there, it shows the grades at various mining stages. So over the first 4 years, all we're mining is that core. And we're mining that core, and you can see the average grade runs around 0.72. Then the next billion tons runs 0.5. And then the next billion tons runs 0.4. So, think of this, almost like, one of those Easter eggs where, the good stuff's, at the top, and then you sort of move down, and as you peel and you go out, you end up with lower grade. And, for comparison, I'm showing mines just south of us. This is pretty much every copper mine in British Columbia that I've got on there. Copper Mountain, Gibraltar, Highland Valley. This is what they're mining right now. It's 0.2 to 0.3. You look at newer mines like Mount Milligan, Red Chris, they're a little higher, sort of 0.5 to 0.6. But, think of Red Chris. That's their reserve, is 300 million tons at 0.57. At Casino, we have a Red Chris with 330 million tons at 0.7, surrounded by another 3 billion tons of lower grade ore. It's really a phenomenal deposit. So talking about the PEA, almost exactly a year ago, came out in June of last year. Net present value, 2.3 billion, IRR of close to 20%. This is at $3.35 copper and $1,600 gold. So very, very good returns on those fairly conservative commodity prices. One of the key reasons why this project adds up as well as it does, core zone, which I think I hopefully convinced you of. The other one is the strip ratio, 0.38 to 1. That is a best-in-class strip ratio. So not only do you have this nice high-grade core, but you also have a deposit that really everything is ore. That's a very low strip ratio. These large tonnage operations, which is what we're contemplating here, you need to have the very low strip ratio to make them work, and that's exactly what we have. That's the first 25 years, which is phase one. Phase two, which brings us, essentially adds another 22 years, brings us to year 47. That adds another $3 billion of cash flow. And that is 2/3 of the deposit with phase one, phase two. We still have another billion tons we haven't included in. It's all mineable, but at this point where, I'm predicting what's going to happen in year 50 to 75, doesn't make a lot of sense, but it gives you an idea of the scale of this deposit. Diving into the numbers a bit more, a couple things to focus on here. First of all, cash flow, again, that first 4 years, looking at while you're going through that core zone. We've got cash flow of $965 million a year over the first 4 years. That pays off the capital and the sustaining capital. So after 4 years on a 75-year mine, arguably, everything's paid off, and after that you're just printing your money. And to put the scale of this of the production into some context, again, because it's 40% gold, 40% copper, 20% moly, it's sort of like, well, how big is this? So I like to talk about it in terms of equivalents. In terms of copper equivalent, we're talking initially 540 million pounds of copper a year. Another way to look at this is in gold equivalent. I mean, it's essentially a 1 million ounce per year gold equivalent producer. So it gives you an idea of the scale of revenue that we're pulling off of this. Cash costs, again, just because of the split of the copper, gold, and moly, it's really better to look at a co-product cash cost. So cash cost of $1.66 per pound of copper, $794 per ounce of gold. That's in Canadian dollars. So, I mean, you multiply those by 0.8, very, very competitive cash costs, bottom quartile. Capital cost, 3.25 billion Canadian. So obviously, it's a big deposit, it's a big mine. When we benchmark this with, other copper projects globally, it comes in exactly where you'd expect it. This isn't a particularly expensive project. It's not particularly cheap. It's just for the amount of production that you're getting out of this mine, this is a typical capital cost for a project of this size. Looking at the economics, I've got obviously I'm not going to go through every box on this table, but, a couple things to point out. If you look at where commodity prices have been here, recently $4.50 copper, $1,800 gold. We're now talking a $4 billion net present value and, at close to 26% IRR. So again, it's very, very strong returns. So switch gears here a little bit and talk about ESG. We've been in the Yukon now for 15 years actually as a company. We've got a lot of commitments. We've got agreements with a number of the First Nations, early stage agreements. We've actually won a couple of environmental awards, good governance, support a number of initiatives, and that sounds good. And a number of companies have their ESG slide, but I was talking to an investor and he's like, well, everyone's got their ESG slide. What proof do you have? And I was like, well, thank you, because that's a good segue into my next two slides. And this is just a couple of things of what really working with the community looks like. And first is our tailings facility. Tailings facilities for all mines are highly scrutinized, and ours is no exception. So in 2017, we initiated something called the Best Available Tailings Technology Study, or BAT study. It was ourselves, it was the impacted First Nations, it was the regulator, it was the government. This process ended up taking 2 years. We started with a blank sheet of paper, looked at every different option for tailings and mine waste, and whittled it down to one final design. And the designs there's lots of positives on that. It's a better facility than what we'd originally designed, but more importantly, those communities and those impacted groups, their input was used every step of the way along that. The other example is the Gateway project, and so the Gateway project was an announcement that the Prime Minister came out to the Yukon end of 2017 and announced 3 roads to resources, and one of those was the road to the casino project. But what's interesting is what does it take to get the Prime Minister of Canada to come up and make a mining infrastructure announcement? Well, before that announcement was made, all of the impacted First Nations had to sign off conceptually on these roads, which they did. Then to actually begin construction of the road, there needed to be definitive agreements with the impacted First Nations, which happened. I'm happy to say, and it's not a great picture there in the bottom corner, but because there's still a little snow up there, but they actually started construction on that road this year. And so, watch this space. We're going to be up there in a couple weeks and hopefully take a bunch more pictures of that road as it develops. The other thing to talk about is the area that we're in. We're pretty excited, obviously, about what's happening with the casino, but really the whole area is very exciting. We're next door to Newmont and their coffee project. That project, was Kaminak, bought by Goldcorp, and then, of course, Goldcorp bought by Newmont. that project's been a little bit quiet, but it just got through YESA, so it's fully through its environmental assessment now. Should be fully permitted here in about a year. It's a great project ready to go, and that sits about 20 kilometers from us. Obviously, lots of excitement in the area. It goes to show that, you know, certainly this is an area where projects can get permitted. The other is white gold. I'm sure they're talking here either today or maybe it was yesterday. Great exploration success around the area. I mean, this is an area that is got, you know, a permitted gold mine, you know, us with Casino, you know, moving forward with Rio Tinto, a big potential copper gold asset, and then with white gold and others, incredible exploration potential. I mean, this is an area that, you know, to keep watching as we move forward. A little bit about valuation. You know, when I look at this graph, I mean, I won't talk about the Filo minings. You know, they have their valuation, and I think everybody probably knows why. But, you know, when we look at our peers, you know, a number of them are sort of trading at sort of 0.2, 0.3. We're trading closer to sort of 0.1 to 1.5, and so certainly have some room to grow here moving forward. The other way is to look at is cents per pound on the ground. I mean, we're trading for a penny per pound of copper equivalent. I mean, absolutely an incredible investment opportunity here in terms of value. So to sort of finalize things here, I mean, Casino and Western Copper and Gold project with, you know, significant copper gold deposits. We're in the Yukon. We love being in the Yukon. It's a great jurisdiction. And, you know, we feel like we've got a real clear path here to unlock value. So what do you have to look forward to? Like I said, we're finalizing the work that we had agreed to with Rio Tinto, and so we're looking to sort of see what the next steps are there. Feasibility study out before the end of June. EA proposal in early 2023, and so we've been slowly making progress. And, you know, as I said when I kicked off, I mean, really the past couple of years is when things have really ramped up and moved much more quickly, and it's been an exciting time over those past couple of years. But I think the next 6 months to a year is going to probably be the most exciting in the company by far. So thank you very much.